Hello everyone. So the topic which I wanted to discuss today is, should we take Trump seriously? As you know, Donald Trump has been sworn as the US president 2 days back on Monday. So the $1 million question, is he creating a speculation here? As you know, Indian stock market has been falling every day, almost every day I would say. So is Trump creating a speculation? End of the day, Donald Trump is a capitalist. Even if you see, he had released his cryptocurrency on his own name as Trump coin. So before discussing into should you really take Trump seriously, let's discuss quickly about the key takeaways affecting the financial market. I'm using the word financial market because the other things like the Canadian and Mexico related things which he has told, all those things I'm not factoring in because we are more concentrated and bothered about the stock market or the financial market only. So first thing is energy independence. So he used the word in the inaugural ceremony as drill baby drill. In the sense, he is considering this as a national emergency, which is the energy independence of America, which will unleash the full potential of American oil, gas and coal. So he called the untapped reserves as liquid gold reserves under our feet. So what he aims at is reducing the energy cost and achieving energy independence and revive US economy. As you know, the US economy has been doing really bad economically with inflation catching up, stagflation happening, the debt also rising much above $35 trillion with the spending on debt repayment being more than defense spending every year, all depicting the doom of US economy. But Trump, being a very shrewd person who's only bothered about reviving US economy, whatever happens, whether it is pollution or whatever any other things. So he's only concentrated on one single thing, which is capitalism and reviving the US economy. Whether it is practical, that we will discuss. Now after energy independence, this is like he'll be drilling and producing lot of crude oil. Mainly it will be shale oil based. We had done a detailed video on oil shales and crude oil, whose link I am leaving above the video link, wherein you can click and see the entire video if you wish. So as the oil prices would fall because of this excess production of oil by US, if they really does that, then the current account deficit of India reduces, which is good for us, I would say. Second is about acquiring Greenland and getting control over Panama Canal. He claims that it is vital for national security. Now the next point is BRICS currency. So what he is telling is that if de-dollarization is in place, the BRICS currency, the BRICS nations come up with more rigorous de-dollarization and come up with a currency which will replace US dollar or which will reduce the use of US dollar for global trade, then he is telling that he will come up with 100% tariff. Tariffs are like if you are importing something, say US is importing a lot of things from China, India, etc. So if they are de-dollarizing, then he will put 100% tariff, means he will tax the products which are being imported from India and China or other countries which are in the BRICS nations, wherein it becomes too much costly for the US personnel to import that or use that. So they will be using their own products. But here the practicality issue here is that there are two things. First is if 100% tariff is imposed on other countries, the other countries importing goods and services from US will also reciprocate this tariff on their products also, which will highly impact the US trades as well. Second thing, if they are stopping imports because of these high tariffs, especially from countries like China, wherein large portion of products are imported from China to US, then US will have to either find alternatives like India. And even if he is telling that India is part of BRICS and he is putting tariff on us as well, then he'll have to produce things by increasing the productivity of US nationals. But in that case, as you know, US nationals, the cost of production and even the manpower is too costly, so that it will again lead to inflated prices in US and again leading to higher inflation. Already they are having tough time with inflation. So again, this will probably go against the US economy, which I fear Trump may not do in practicality. The other thing he told which is to be taken as positive is war ending the war, say Russia-Ukraine war. So Putin is ready to talk with US or Trump, but again they will have their own needs and they will become opportunistic. So what Putin wants also needs to be seen. Also, getting back to the tariffs, he was telling immediately he will put 60% tariff on Chinese products and around 25% for other countries gradually. So I fear the practicality of that tariffs, as I mentioned. So because of all these things, because of the positivity or maybe the speculation which the Trump has created, because of that the US dollar has been becoming very strong. Hence the rupee has been depreciating against US dollar. So as we speak, one US dollar is something around 86.5, 86.6 Indian rupee, which is kind of near to 10-month low. But in between, RBI government has been trying to stabilize the further fall of Indian rupee against US dollar by floating out some or selling out some US dollar reserves from the forex reserves. Now as we speak, as of January 10th, the forex reserve is around 625.87 billion US dollar. I would like to again introduce one more factor wherein why this rupee is falling, or is rupee falling so much unlike the past, or is really rupee falling, or is it just an investor sentiment or the media hype which has been projecting that the rupee has fallen much. Let's evaluate that as well. So first one, why rupee is falling. If you see the US job data, US gives out monthly job data every month. So this month also the job data which is released is good than expected. So the Fed rate cut may not happen, because good job data means more people are employed, there is less job loss, people are earning means they have the spending capability, spending capacity, so they buy more means the inflation increases. But if inflation was not there and it was a deflation, then the government will have to cut interest rates, so-called Fed rate, by the Federal Reserve, the central government of USA, just like RBI for India, wherein they will have to make the cost of borrowing cheaper so that people can borrow and spend. But here, as the job data is good, the expected Fed rate cut is also, interest rate cut is also, the chances are very less. We can say no only to the Fed rate cut, at least for the coming few months. So this has led to the US 10-year, which is basically the long-term bond yield, to remain high. As you know, from India also there has been a huge FII outflow, foreign institutional investors. Huge amounts of funds, even from the stock market, has gone out. They have sold here because the rupee is falling against the US dollar, which is again acting against them. And they have been buying US treasury bonds, especially the long-term bonds, wherein they are getting higher yields, risk-free returns, I would say, because India is a emerging economy wherein there are a lot of risks involved, especially wherein the rupee is falling. So they are investing in more attractive space in their own country, which is the US treasury bonds. Because of this foreign outflow, the forex reserve has been falling as well, which has again led to falling rupee value against US dollar. Also recently, the earlier RBI governor, Mr. Raghuram Rajan, has been telling that India becoming the third economy. This is not actually because India is growing at a much higher rate, wherein the GDP projections has also been reduced for the current fiscal year and for the next year due to concerns stated, but due to the lower growth rate of Japan and Germany, wherein we will overtake them and become the third largest economy from current fifth largest economy as far as the GDP value is concerned. But currently, as we speak, the oil prices has been increasing. If the crude oil prices is increasing, it is affecting our economy because we are one of the largest importers of crude oil. Then also there is continuous falling in stock market because there is anticipation of what will happen in the upcoming budget. In the first week of February, the Indian budget, wherein will really Nirmala Sitharaman or the current government will bring in some conducive environment for investors as far as the tax, capital gain tax and other things are concerned. So that uncertainty remains. So the market is falling in anticipation. Trump presidency coming in, so that is another factor wherein because of this tariff and other speculations, the market is skeptical. Another thing is that companies like Nestle, Asian Paints, etc., the management has been telling that the Indian middle class is not buying as they used to in earlier times. So there is lesser profitability for the companies, because end of the day there is no consumption theme, means there is lesser volumes and lesser profitability. So this is another economical concern which has again been reflected in anticipation in the stock market as well. Basic point here is that Trump, many of the things including the crude oil, increased crude oil production, though it is bad for the nature as far as the emission is concerned, because they are out of the Paris agreement and all, I will not get into that, but still for the economy perspective of India, the current account deficit can reduce, because we have been importing from US as well the crude oil, so maybe we'll increase it further, the import of crude oil from US. So this can also reduce our bills for crude oil if they produce in excess. Then also, as we discussed, if they are tariffing on China a lot and they are consuming less from China, the next destination probably is India, though Vietnam and other countries are available. And also ending the war is a positive thing, wherein crude oil prices can even come down, again positive for India. And if there is no geopolitical tension, then the market can also rally, again positive for investors. But because of some speculation, pure speculation I would say, the market has been falling, which will soon come to a conclusion as per me. And talking about rupee falling every day, media has been telling this, the analyst has been telling this. So is it really correct? So I have seen some article by Print as well. If you see the screen, so rupee has been falling since 1985, since the 1991 liberalization. Since then, the rupee has been falling continuously since 2025 as we speak, almost in the rate of 3.5%, 3.5 to 3.6% every year, CAGR basis. So this is falling of rupee against US dollar. Otherwise, you can say US dollar is having a compounded CAGR of 3.5% against rupee. Here falling is for rupee, obviously. If you see in 1991, there was two devaluation of around 9% and 11%, cumulative 20% devaluation done by Manmohan Singh in 1st and 3rd July 1991, so that trades become easier, because if the rupee falls, then foreign nations can buy more from India, because for $1 if you get more rupee, so the buying power increases for the foreign nations, so the exports increases. So this was to liberalize the economy so that we have more exports, our current account deficits comes down, etc. Even the other one, the devaluation was done way back in 1966 by Morarji Desai under the Indira Gandhi government, wherein there was a 57% devaluation. That was much higher. But these were the only two devaluations which is done in the Indian economy till date. But as you see, as I told, around 3.5% only is the average reduction in the value of rupee as we historically see. So people are telling that there has been a huge fall. No, it is a regular fall which happens every year. There is nothing to worry about this. Maybe it will touch 100. Beyond that, will it go? It's a question. But still, it is bound to reduce, which is, as per me, not an area of concern at all. The rupee will fall very steadily, and it has never dipped abnormally, even during the housing bubble or 2008 crash or whatever. So at that time also, even during the COVID times, it has been steadily falling. But the RBI's strategy of selling US dollar and regularizing or avoiding the rupee fall beyond the psychological level of 85 rupees was something which they should not have done. They have spent almost $50 billion in this. That is why our forex reserve has reduced to $625 or $626 billion, wherein it had touched 700 levels. But still we have enough forex reserve. But now that it has fallen beyond 85, as we speak it is 86.55 around. So they have stopped, RBI stopped any action against this, and they have stopped selling the forex reserve. So now that we have covered all about Trump speculation, all about Trump presidency speculations, rupee falling, stock market falling. So the conclusion here is that speculations will keep on coming. You will not get such opportunities wherein valuable stocks, good stocks have gone down so much. Many of them have touched 52-week low quality stocks available at cheaper valuations. You should do your own analysis, but exactly this is the time to deploy your money. As always, I have been telling, you should remain in some portion of cash, and this is the time to gradually deploy your cash. Even going forward, 2025 may be a year of consolidation, so it may be a boring market wherein the stock prices may not go anywhere, but you should consider opportunities wherein your watchlist stocks are going down and even your portfolio holdings are going down. Maybe your portfolios have fallen beyond 25 to 30% as well. Not to worry, if it is quality stocks, keep holding them, never sell. Continue your SIP in mutual funds also, because rupee cost averaging happens there. Stay invested, stay informed, know about the market. I will try to cover each and everything majorly happening in the market so that you can do your wise decision. But it is very clear that if others are fearful, you have to be greedy, you have to buy, because if you buy in dip, as I always tell, then only you will make sizable alpha, sizable profits. Otherwise, you will miss the opportunity. If you have any queries or suggestions or any recommendations on the content which we are posting here, always open for such suggestions. See you in next video. Till then, happy investing.